Good morning. Thank you all for attending today. It's going to be a fantastic 2 days here at Hack.summit. We're going to have a lot of fun together. I see a lot of friendly faces in the audience. And we're all here to learn about building on Web3. So this is going to be a very technical, developer-focused event where we're all up-leveling our skills together. And I couldn't be more excited than to be here with you today. So what is Hack.summit? Let's start off with a little bit of context for this event. So this event has actually been running for 9 years now, which is a phenomenal amount of time for an event of this scale. And this event basically unites developers from around the world and educates them on building. We've actually been hosting these events for charity as well historically, and many nonprofits have benefited from these events. Organizations like Women Who Code, Girls Who Code, Code.org, the Hour of Code Initiative, etc. So this is an event where we are not trying to make a profit ourselves on the event. We're doing the event to give back and help the community. And this is the first ever event we've ever held in Asia. So we're super excited to have Hong Kong be our landing spot to bring these events to Asia. And a little bit about our venture capital firm. And this is our QR code if you want to scan that to connect with me later on Telegram. Hack VC is an early stage venture capital firm. We invest in blockchain startups, Web3 startups. We partner with early founders, helping them build their organizations and to launch their protocols. And we have a very technical team of engineers in our team that works directly with these founders. We have over 420 million in assets under management, and we've been investing for years in cryptocurrencies. So if you're building a startup, please reach out to us, and we'd love to work with you in that regard. We'd also like to thank some of our co-hosts here, Rocktree Capital, AltLayer, and Berachain. AltLayer and Berachain will be hosting hackathons as well in the sub-venue, which is down the hall from us. And by the way, I don't know if you guys have looked around this event venue yet, but it's a fantastic venue here at Cyberport. We're so thrilled that Cyberport has hosted us here this week. There's so many fun things to do here, virtual reality, augmented reality. So if you have some time in between the conference sessions, go check out some of the venues around the event, and I think you'll have a lot of fun. We also have incredible partners, as well as hosts and media partners that have worked with us to produce this event, and we're so grateful for your support, so thank you. I also want to thank our event organizers. Chi Hong in particular has gone into extraordinary lengths to make this event happen today, as well as Rodney Yesup and Min Kim, who have helped us to make this event successful, so thank you very much. So now I'll go into a very brief presentation on my thoughts on how open source is being transformed by Web3. So I myself am a former developer that has learned business over time and have started several companies. And what's near and dear to my heart is how do you actually create innovation using open source and using Web3. So there's going to be three small parts of this presentation. The first is monetizing open source. So let's talk about what that means. So open source software is free and open software that you can download for free on the internet. You might get it off of GitHub, places like that. And historically, software developers have monetized this software by building a free version and then a separate version, which is what they call the enterprise version of that software, where you would charge money for that software. Examples of this would be Redis, which is kind of an open source database, as well as Elastic, which is an open source logging system. And this is, for the last 10 or 15 years, this is how open source has been monetized, traditionally in Web 2. But there's challenges with this monetization model. One of the challenges is that you have to build a separate free version from an enterprise version, and you have to decide where to draw the line between those two versions. If you give away too much for free in the free version, then nobody wants to buy the enterprise version. If you give away too much in the enterprise version, then nobody will use your free version because it doesn't add enough value. So there's a fundamental tension there. And I originally started off investing in this category, but I realized there's kind of a better option out there for developers, and this is kind of where Web3 really inspires me, and this is why I'm so excited about tokens and protocols, because we think this is the more elegant way to build a business off of open software. So instead of building an enterprise version and a free version, you're literally giving away all the software for free. Everything is free, everything is open source, everything is decentralized. And you're monetizing by holding back a percentage of tokens for yourself and for your team. And that's basically how you make money off of this. So it's just a much more elegant way. And software developers around the world, including here in Hong Kong, are building their businesses using this paradigm and using this business model. And it reduces a lot of barriers for them to actually be successful. So we think this is an incredible financial innovation in building software that creates new economics for developers all over the world. Now, there's lots of ways you can actually make money on these tokens and reward the token holders. And I'll give you 3 examples of this, just so that you understand kind of the idea here. The first idea is you can actually charge users of your software who are using it, and the servers that are running the software, the validators that they're called, can actually charge these validator fees. So the token holders can actually benefit from those fees over time. So that's one possible way that you can monetize open source. Another way you can monetize it is by charging what's called a take rate or a fee on your software. So you might be very familiar with fintech companies, companies like Stripe and Plaid. These are multi-billion-dollar companies that are in the fintech category. In Web3 and in cryptocurrency, the analogy to this is called DeFi, decentralized finance. Imagine having financial instruments on-chain, a whole new financial system that is powered by cryptocurrencies in Web3. This DeFi is kind of like a new financial system, and we haven't had a new financial system in the world since the stock market was invented in the 1920s. So this is kind of a once-in-a-generation opportunity for us to embrace a new financial system. And the way that DeFi actually makes money for the developers of the software is they charge a take rate, a percentage of those fees that you're actually earning in terms of the yield of that software. And then finally, the last idea, and this is the most exotic way you can actually make money on these tokens in cryptocurrency. It's called this buy and burn model. So raise your hand. Have you guys ever heard of what's called like a stock buyback in traditional Web 2 markets? A stock? Yeah, you heard it, yep. So a stock buyback is when you're buying your own stock off the market, and that effectively raises the price of that stock for all the existing shareholders. So in cryptocurrency, you can do the same thing. You can actually buy your own token off of markets, and you can effectively raise the price of that token for all the holders. So if your protocol charges fees, then instead of giving those fees out to the token holders, you can instead use those same fees to acquire your own token on exchanges and effectively increase the value of those tokens for all other token holders. You can also burn tokens on the market as well. So you can take tokens and sequester them, put them into a special wallet that you can never access again. And by doing that, those tokens effectively are being taken out of circulation. So if you think about like a monetary supply idea in economics, imagine reducing the supply of those tokens. That effectively raises the token price for all other holders of those tokens. So we think these are very innovative ideas for how you can actually make a business model off of tokenomics. The second thing I want to talk about, and this is something that I think we must address today, is the idea of open source security. So security is a very hot topic in cryptocurrency and Web3. And if you look back into Web 2 and traditional businesses, most traditional software systems are very secure. You have a firewall, the firewall has a database, you have proprietary software behind that firewall, and all that software is secure because it's not open to the public. Nobody can access that software. Your firewall is difficult to penetrate, you're not publishing your code. So this is how most businesses in the world work, the architecture looks like something like what you see in this diagram here. But as we saw in the last year, Web 2 financial systems are still subject to failure. You saw Silicon Valley Bank fail and have to be acquired last year. You saw Signature Bank, and you also saw First Republic Bank all fail. And so that kind of shook our trust in the financial system worldwide, where we almost had a cascading bank crisis around the world if it wasn't for the government in the US to step in and to basically bail these banks out using the surplus funds that they had to do so, and the acquisitions that JP Morgan and others made of these banks. So this is kind of a scary reminder that financial systems can fail even in Web 2, not just in Web 3. Now in Web 3, you have a system that's based on open source software. It's an open network, right? And it's trustless, so you don't have to trust any bank. You don't have to trust someone to hold your assets for you. You control your own custody, you control your own assets, and therefore no one can basically take it away from you. However, Web3 systems are prone to hacks. In the first half of 2023, there was around $500 million in hacks in Web3. And this is very unacceptable, I think, for decentralized finance to succeed. Because if you could imagine sending a wire transfer from Hong Kong to the US, and for there to be a very small chance that all of your capital is lost in that wire transfer. Who would ever tolerate that, right? That is not an acceptable outcome for most people. And so we think that this is actually a gating factor for cryptocurrency to succeed. And so, and the irony of this model is that it's actually very attractive to hackers, because hackers are attracted to large pockets of capital and they're also attracted to having this open source roadmap for how you actually conduct that hack. It's almost like you're giving someone like a map for how to actually conduct the hack because the software itself is open source. So we must address this. And we actually think that there's some pretty creative ideas out there in cryptocurrency for addressing these ideas, which we're going to talk about now. So the first idea is to use basically a better programming language that is a more safe and secure programming language. So there's a company that will be presenting this week called Movement Labs, and they use a technology called the Move programming language, which is a safer, more secure programming language. And that language is a formally verified language that is type safe and is better for developers to use, and it basically reduces smart contract hacks. So this basically is a way to have fewer hacks occur in cryptocurrency and for your software to be more secure. It's not perfect, you can still hack the systems, but it's an improvement to what we have today. The second idea, and this is a more radical idea, which we think is actually quite fantastic, comes from a company called Firewall. And the idea behind Firewall is when you're conducting a transaction on the blockchain, imagine if you delay the transaction. You intentionally slow the transaction down so it doesn't finalize right away. And in that window before it finalizes, in that several-hour window, you can actually inspect that transaction and catch any potential hacks. So you could actually halt that transaction, stop it from finalizing before the disaster occurs and before the money is hacked. So we think being patient and having a slower experience in crypto for these large financial transactions is actually very appropriate. You know, like we've all been saying for the last few years that wire transfers are too slow. It takes a week to do an international wire transfer. Yet that is how the world operates today on these very slow wire transfers. We think that it's tolerable to have a several-hour delay instead of a week-long delay, right? And to have that safe feeling that your capital is not being hacked, basically, especially when you're doing very large financial transactions. So we think this is a very innovative approach towards making crypto more secure. And then the last idea, and this is the most exciting one from my opinion that I've heard recently, is from a company called Aligned Layer. And the idea behind this is to actually formally verify the code that runs on the blockchain using formal verification techniques, and to actually prove, mathematically prove, that the code does what it says it will do. That way the code executes properly. So we think Aligned Layer is creating quite the innovations in Web3, and we think this is going to be a fantastic new addition to the category. So the last topic we're going to talk about today is open source privacy. So privacy is a hot topic for most cryptocurrency investors. As you know, with cryptocurrency, your address is private. You're using an anonymous address, but there still are privacy concerns that users have. So today in Web 2, financial transactions are all completely private. If you were to do a wire transfer in Web 2, that information is not available for inspection for others. It's not open source. And this is I think what people really enjoy. Like I don't think any of us would be very happy if our bank account information was made available to the public in the normal real world. So we think that this is an important topic to address in cryptocurrencies as well. And an open source financial system can potentially have a lot of benefits, but you have to make sure that privacy is part of your solution. It can't just be an afterthought. An early attempt at privacy is this protocol you might have heard of called Tornado Cash. Tornado Cash basically anonymized your transactions, allowed them to be sent across the web, and to mask who you were by remixing your identity effectively with other users. This was an early first attempt at doing this, but it was unfortunately taken advantage of by money launderers, including the Lazarus Group in North Vietnam, who abused this for money laundering. So we think this is an early attempt, but it was not sufficient, and we think there's better ways to handle this in cryptocurrency going forward. So one idea behind this that we think is really interesting is this idea of what's called a zero-knowledge proof. This is a mathematical proof in cryptocurrency, and the idea behind this, and you can see in this diagram here, there's an analogy where you have someone who walks down a tunnel and has a password to a door, and you want to prove to the other person that you can actually get through the tunnel without revealing what the password is. So imagine someone goes through that entire tunnel, loops around to the beginning. By them going through that tunnel, you know for sure they have the password to the door on the other side because they walked around the tunnel, right? And you never heard them say the password. That's a very simple analogy to think about what a zero-knowledge proof is. And there's a couple of ideas for how to take advantage of this to make privacy exciting in Web3. The first idea is what's called a dark pool in decentralized finance. So the idea behind this is, imagine if you're trading with counterparties, but your financial information is masked and is not made public because you're actually creating privacy around that pool of capital. That's basically this idea of a dark pool, and that's one approach towards creating privacy. And the most exciting one, this is the last slide of my presentation, is a brand new concept that we're super excited about called fully homomorphic encryption, or FHE. We think this is kind of the holy grail for cryptography. Fully homomorphic encryption, the idea behind this is, imagine encrypting data, like taking a database, encrypting the data in that database, and being able to actually perform queries on that encrypted data and to interact with that data without decrypting that data. So the data remains encrypted, the data remains private, yet you can interact with that data. It's a mind-blowing idea. This idea was actually invented in the 1970s, so it's not really a new idea, but only recently did it become high-performing thanks to some creative innovations by very, very thoughtful PhDs in cryptography. And so this protocol called Phoenix is building this in Web3. So we're very excited for the future of fully homomorphic encryption, and we think that this technology can usher in a new era for privacy in Web3. So those are my remarks today. I want to thank you for listening today. We're going to have a great time today, and if you want to connect with me on Telegram, please do so either about Hack.VC or Hack.summit. I'm happy to chat with you further, and off to the races with the next speaker. Thank you very much.